Good afternoon, everyone. It's so nice of you to attend out here, spend your time with us. And my name is Salim Ali. I'm a licensed insurance agent and a certified credit repair expert. We're going to be talking about you and your credit today. At the end, you can ask me any questions or you can call me up. I'll give you my information and I'll be glad to help you out. Like I said, thank you for joining us. Our hope today is to provide you with some valuable information, have some fun, and enjoy the next hour. What will we cover today? What is a credit report? Why your credit report matters? Your credit scores. What constitutes a credit history? Significance of good credit score, effect of good and bad credits. Basically, that's what we'll be turning in. So what is a credit report? A credit report is a record of all your credit history that begins when you open your first credit account. The volume and nature of information on a credit report depends on a couple of things. How much credit you have applied for and received, and how well have you paid your debts. The type of information that would be on a credit report includes your personal identifying information, just like your date of birth, your social security, the name, if you have any variations, like Salim would be Sam, those kind of things will show up, addresses and employers. So we were talking about what's in the credit report. Besides those things I mentioned, it's list of your credit accounts, including accounts detail, like the type of account, when did you open it, your credit limits on your credit cards, the balance left, the monthly payment that you make, date of the last purchase, your date of last activity and payment, and if it was closed, when that account was closed. Credit inquiries. If you made any credit inquiries, it will be there. Collection accounts, if you have any collection, and any public records, whether it's a judgment, tax liens, it will show up. Personal statement, you will only have this if you submitted. In other words, when you have a bad credit and they don't take it out, after trying, you can make a statement out there. Hey, this wasn't mine, blah, blah, whatever. And that will only come up if you made that statement. If you never made it or you never contested that, it won't show up. When a credit report does not include, it does not include your credit score. It's done later on. The three numbers, which is very, very important, it does not include that. But they do all the calculations, and based on that, so the credit report is just your information. The credit score is what is calculated based on that information. The credit reports are generated by the credit bureaus. There are over 40 of them. To be precise, it's about 46 agencies that report on your credit or different information. And based on all those credits, that's how it's compiled. The main three ones, which is TransUnion, Experian, and Equifax. Each of these three national businesses has their own credit report on file for you. These reports are completed using information provided to them by data furnisher. So in other words, these are three major ones. There are a lot of them out there, but almost 100%, 99+% of the companies or creators rely on these three big ones. They will not go with all three of them, but they will go with any of these that they choose. Some bank may be Equifax and the other one may look at TransUnion. And the records in there are not the same. Because if a bank is going through TransUnion, they're going to report everything on TransUnion. And anything bad out there may not show up on Equifax because they're not reporting to Equifax. So it's different, all three of them. So that's why you have to check all three to make it up. Data furnishers include credit card issuers, mortgage lenders, and auto lenders, and the and the creditors through which you've taken out loans. If you've fallen behind on any bills, you may also see listing from cell phone companies, utilities companies, doctors, hospitals, all your records from every place where you have applied or you have the credit extended. Now, there are instances where not everybody is part of it. In other words, sometimes you may get a credit. For instance, a personal or guarantors, or let's say you get a second loan on your house from an individual, he may not be a part of it. It may not show up. Unless they report, it's not going to show up. It is not automatic process. That means what's on your credit report can influence your loan approval, interest rate, the credit limits that you assign, the deposits requirement, like for instance, if you're getting an apartment, rental apartment. They look at it, and if you have bad credit, they may still give it to you, but instead of $2,000, they might ask $3,000 for deposit. They look at it nowadays for a job too. They want to do your background check, the credit check show up too. Those also are part of it. And you know what the result is. If you have a bad credit, sometimes you're rejected. They don't give it to you, whatever it is. So it's not just the ability to get the credit that's affected by your report. It's how much you can get financing or for anything. It's so even a bad credit can get you sometimes things like that, but it will be a higher rate, a much higher rate than what you would have paid otherwise with a good credit, and that makes a lot of difference. How accurate is your credit report? Based on reports by the U.S. Public Interest Group, it's not accurate. As you can see, 25% of the report contains errors serious enough to result in a denial of credit, because they can always get mixed up with names, social numbers, things like that. 70 to 90% contains mistake of some kind. 54% contain personal demographic mistakes, information that was misspelled, long outdated, or belonged to a stranger. You had never lived at a place, but it shows up. You were never part of it because somebody was there with similar names. Or people put in input, they put wrong input. Then 30% contain credit accounts that has been closed by the consumer but are still listed as open. The 5 top credit misconception. People think if they check the credit, the credit score will drop. This is not true. You can check your own credit. It does not have the effect on your credit at all. Yes, if somebody else check it, then it does. But if you do it yourself, it doesn't affect you in any way. Closing all account will improve your credit score. That's not true either. Most of the time, it can hurt you. Because let's say that account is a real old one, that's kind of a mature your credit. But if you close that old one because you're not using it anymore, it can hurt, and the history will come down, and it will show up as a new account rather than 3 years old, 3 years rather than 10 years old because you had that account. So that will change. Once you pay off a negative record, it is removed from your credit report. That's not true either. It will stay. Even if you make a payment, it doesn't disappear from your credit report. It will still have that negative, that you were late, that you didn't pay on time, whatever the reasoning is. If you do a settlement through a company and still pay that, instead of 2,000, you end up paying 500, it will still show. And those hurt you. So it's like paying on an old account sometime and have been collected. I don't know if it makes sense for you to pay that. It's not going to make a difference on your credit report. The next one is being a co-signer doesn't make you responsible for the account, and you know that that's not true. You co-sign, they don't pay, you're responsible. It's like a joint account. You're responsible. And paying off a debt will add 50 points to your credit score, and that is not true either. It does not add anything. Okay, now your FICO scores. And you know what FICO is? That's those 3 numbers that are assigned to you. It started at 300 to 850. The lower the number, the bad. The close to 850 or 700 is better. So they have it like poor, fair, good, excellent, and outstanding. 35% of your rackets score consists of your payment history. So that's a maturity. 30% of your credit is your utilization. When you say utilization, is let's say you have a credit limit of $1,000 and you use 9,000, that's high credit limit. If you use less than 30%, which is $3,000 or $3,300, it's a plus. But anything over that, it hurts your credit report. So that's one of the things. Your length of your credit history, like I was talking to you about, if you close on an account, it's going to hurt you. You know, even if you're not doing anything with it, let it stay. Don't close it. And 10% is a new credit. Whatever you get, that adds up about 10% if you're approved. And it's the next 10% is the credit mix. When I say credit mix, that's your home insurance, credit cards, student loan. As much as of a mix it is, it's better for you. Because now they know it's not only credit card that you're paying on time, but you're paying everything on time. It's a good mix. That's what constitutes your credit report or credit. Okay. Significance of a good credit score. There's great benefits, you know, because you know nowadays without credit, it's very hard. You can't even rent a car, you know. Even if you have the cash, they won't take it. So it's I can't stress on it how important it is to have a good credit score. The benefits you have is it will be very easy to get an approval from the creditors if you have a good score versus not getting any, or you get a much better interest rate. You get good loan terms, same thing, interest, payments, deposits, whatever. How to maintain a good score. Building a good score is a start, but maintaining it needs some help. Your commitment, in fact, to continue to take advantage of the benefit of good credit. In other words, all it is if you have a good credit, try to maintain it, keep it, because it's very hard to go back up again. It will take a lot of efforts, but if you have it, even if you don't have a larger payment, just pay minimum payment. That will at least have a good credit history that you need.
Quick question. Do you like evictions and stuff like that?
They show up, and they can hurt you pretty much.
Okay.
Quite a few, they stay anywhere from a year, like an inquiry, 2 years to 10 years. So if you have a bankruptcy, that's like 10 years. Eviction can be 7 years. Most of the things are 7 years.
Does breaking the lease affect it too? Like you weren't able to, but you break the lease?
It depends how you report it. If it does not report, it doesn't matter. Right? Remember I told you, some landlord work with the credit union because it costs them money. So some don't want to work, don't want to spend money. But some do, and if they do report it, the other thing you can do is, there's a lot of, let's say you made one late payment, whatever the reason was. You can always get a goodwill, make a goodwill effort. Call the creditor and say, hey, I've been on time and I need your help. And sometimes people do that. They can delete that, they can change it. Make sense? And so it doesn't hurt your credit, because your credit can fall 5 points like that. And it's hard to raise that 5 points back again. It takes a time. So, but if you have a bad credit, there's help available. You can do it yourself.
Yeah.
You know that, right? There's a whole bunch of things available. You can do it. You can write a dispute letter. You can ask them. You can ask for verification. There's a whole bunch of ways you can do it. You don't have to live with a bad credit.
Also, you said that so like if you have debts, over past due debts, and you pay on them, it doesn't automatically remove it, right?
No.
So what's the benefit of paying it off?
None. I didn't want to say that, but you said that. I'm glad. You're just wasting good money.
Right.
You might as well continue with your good credit payment, because after certain years, you're like, for instance, in Texas, after 4 years, they can't even collect on that. They can't take you to the court. I mean, it will always stay on your records, but they can't take you to court because the statute of limitation passed.
Is it true that if you call them to, let's say you have a past due and it's almost the 7 years, but you tell them, hey, I want to set up a payment plan, does that reset the 7 years?
That's true. It's from the time of the last payment or the last contact. So that's why, let's say, that's why people, you probably received letters out there where people say, okay, you know what, just make a $10 payment.
So they're trying
You know why? So that the $10, the first $10 you make, it starts 7 years again. You know, now you're obligated. So now they can come after you, they can do things.
yeah.
But if you don't make it, then they can always send you the letter or call them up. And calling even, they can't bug you because there's some statutes, there's some laws on there. You can stop those calls. So yeah, it doesn't make sense to pay off the old ones. Right. Unless you really want to pay it and it's a small amount. Yeah. Hey, you might as well pay that $50 and get rid of it, you know, so that, but it will still stay out there. All it will do is, it will say paid collection or paid. The word paid might come up on that, but that's about it. The effect will not be on the credit.
And in one effect, like if you're trying to get a loan, would they look at that? Or?
What happens sometimes if you go to a home loan, as an example, before they give you the home loan, what they want to do is they want to make sure that there's no collections out there, there's no outstanding, because if it's a bigger amount. Mm-hmm. The reason being is, let's say you buy a home, and now somebody can come after you. What happened to their property? They can put a lien on the property, they can get a judgment and put a second on it too. So there's a whole bunch of things. Mm-hmm. So on that big property or something like that, you're buying a car as an example, they might put a condition, hey, I see you passed due on 2 of them, bring your credit current, then you pay. You have no choice, or don't get the loan. But then at that point you do pay, you know, depends what they need. Or you can write them a letter, speak them, and see where it lands. I mean, at least it's worth a try. Yeah. So before you apply for a loan, before you do any major things, make sure you have a good credit. Because it will, even if they don't give you a loan, it will come up as a credit inquiry, and that will take off your points again. So because you can check your credit anytime without hurting it. Yeah. So you can always do that. And you know, nowadays there's Credit Karma, there's Credit Sesame, and all that kind of thing. You can check your own, you know, on the phone. It's just you have to know how to get rid of it. Checking credit is not a big deal anymore.
Thank you for your
Nice
time.
having you. Thank you. Appreciate you coming in. And like I said, if you have any problems, any calls, give me a call. I'll give you my card. I'll be glad to help you over the phone, whatever you need.